What is a golden crossover and death crossover? The golden crossover and the crossover are terms used in technical analysis to describe the crossing of 2K moving average, typically the 50 days moving average and 200 days moving average. These crossover are seen as a signal of potential trend changes and are popular indicator used by trader to assess the market moment. Golden crossover. The golden crossover occur on the short-term moving average, usually the 50-day moving average, crosses above the long-term moving average, typically the 200 days moving average. This is often interpreted as a bullish signal, indicating that the price and trend might be shifting to the upside. How it works? The short-term moving average 50-day represent the average price over the last 50 days, so it move responsive to recent price changes. The long term moving average 200 days is smooth out price movement over a longer period, giving you the more stable view of the overall trend. When the short term moving average crosses above the long term moving average, it suggests what recent price and is stronger than the long term trend, signaling potential upward potential. Golden crossover signal. The golden crossover is often seen as a buying signal. Trader interpret that as the short term of the bull market or uptrend, as the short term of the price action become more positive and outpaces the longer term trends. It is generally followed by an increase in buy volume confirmation the signal. Example, suppose the 50 days moving average crosses above the 200 days moving average. This indicates that the short term price action is stronger than the long term trend, and the trader maybe take this as a signal to enter the long position. Death crossover. The death cross occur when the short-term moving average, typically the 50 days moving average, crosses below the long-term moving average, typically the 200 days moving average. This is often considered bearish signal, suggesting that the market might be entering a downtrend. How it works? Just like in the golden crossover, the short-term moving average is the more sensitive to the recent price change, while the long-term moving average represent the broader trend. When the short-term moving average fall below the long-term moving average, it suggests that the recent price movement are weaker than the overall trend, which could be indicate the downtrend movement. Death crossover signal. The death crossover is typically seen as a sell signal. Trader interpret this is as the beginning of the bear market or downtrend, as the short-term price action become the weaker than the long-term trend. A death crossover is often accompanied by increased selling volume, further confirm the bearish signal. Example, if the 50-day moving average crosses below the 200 days moving average, it could be indicate that the recent price action is weakening and the trader might look to the short or exit the long position. Key different aspect: golden crossover, death crossover, signal, bullish signal, buy signal, bearish signal, sell signals occur when 50-day moving average crosses above the 200 days moving average, 50-day moving averages crosses below the 200 moving average. Interpretation: potential uptrend or beginning of the bull market, potential downwards trend, beginning of a bear market. Market sentiment: optimistic buying pressure, pessimistic selling pressure, action buy or go long, sell or go short. Trend direction indicate possible uptrend, indicate possible downtrend. Why are these crosswire important? Trend identification. Trend identification, both the golden crossover and the dip crossover help trader identifying whether trend is shifting either upward golden or downward deep. Momentum indicator, these crossover can be used to measure the momentum, giving the trader a sense when the market is transitioning between the bull and bear phase. Risk management: by following this signal, trader can better manage the risk by entering or existing position based on the market sentiment and trend direction. For example, the golden crossover might prompt a trader to buy stock, while the death crossover might prompt them to sell or short. limitation of the crossover signal. Lagging indicator, moving average are the lagging indicator, meaning they are based on the past price and might not always predict the future price movement accurately. Crossover happen after a trend has started, not necessary before it. False signal, it is the choppy or sideways market. Crossover can be produce the false signal where the price quickly reversal causing losses if the trader are too quickly on them. Confirmation indicator, many traders use the golden crossover and death crossover in conjunction with other technical analysis tools like value, momentum indicator, and trend line to confirm the strength and volatility of the signal. The golden crossover and death crossover are the simple yet powerful tool used to identify the potential changes in the market direction. The golden crossover is typically a bullish signal suggesting a potential uptrend, while the death crossover is a bearish signal indicating a potential downtrend. However, like all technical indicators, these crossovers should be used in conjunction with the other analysis tool to confirm the signal and avoid the false interpretation, especially in volatile or sideways market.